So, welcome traders. I'm speaking to you from Lakion, an island in Greece, where I'm here for the week with some friends, and we are racing at the moment. So this is a new experience for me. So what I'm going to do is have a very quick run through the markets because I'm going to be uploading from my phone, so to speak. But I thought I would just send you a message and say, look, if you're in the UK and you've got miserable weather, I'm so sorry about that. But yeah, not everywhere right now is terrible, and actually the market's also showing some promise. So I mean, let's go ahead and have a look and see what's going on. All right, so I'm going to keep this very quick if I can, hopefully under 20 minutes. Let's see how this goes. So first of all, I'm going to be looking at CPI out of Europe. Again, the US economy is right now is just not just one of the strongest in the world, but one of the strongest that it has ever been. The debt stuff aside, which by the way has been around for decades, and obviously is still something to be taken seriously. That aside, it's outstanding. We all wish we could have an economy this good. So also we've got Easter, a lot of Easter weekends around at the moment. If you celebrate those, or if you're on holiday, it doesn't matter if they're also national holidays. So on the UK, I'm watching the manufacturing PMI on that will be on Wednesday, but there's a holiday there. We've also got obviously lots of data out of the US, but the stuff that I think we really need to be paying attention to is going to be Wednesday evening. This is the FOMC statement and the interest rate decision out of the US, because really what we're wanting to know is rate hikes for longer. So in other words, remember that rate hikes are to cool inflation, essentially, and rate cuts are to stimulate the economy. The economy doesn't need stimulating. That's a fact. So the rate hikes are really there if we still have inflation at the moment. Again, almost all of the inflation that we've experienced over the last 18 months to 2 years is almost all corporate greed. And so we're going to have to see what happens to that. But that's really what you want to pay attention to, because that could impact things. Certainly, I expect some movement on the dollar around that. It could be significant, or it could just be transitory, meaning it could be significant where it changes the trend for a week or two, or it could be transitory where it just disrupts the market for a few hours. And then on Friday, of course, we have the big kahuna, which is non-farm payrolls and unemployment. Want to pay attention to that as well. My expectation is it'll be relatively standard. There might still be a surprise number on non-farm payroll, but I expect the employment rate to be roughly somewhere between 3.6 and 4. So let's see how that goes. All right, moving on. All right, so let's have a look at the VIX. So again, you can see that the VIX has recovered, although we had a bit of a spike up, and really a spike. Again, there are lots of people that get incredibly stressed about this. Don't get stressed about this. This is just one indicator amongst many, and generally speaking, if it's sitting well below these levels, it's a slow developer. It's not something that happens overnight, and it is not an indicator of impending doom. Okay, so, but you can see already it's had a bit of a rejection, and we can see that the markets have kind of calmed back down, and so it looks dramatic from where it is now. It's really not. We've got to kind of put it in perspective. We're still sitting in very, very safe areas, and we're likely to be that way for the foreseeable future. There's nothing that really should be upsetting that. One of the things I would say that could upend everything is the US election. So, for example, if there's a coup, a military coup, which is the only kind of coup there would be. I mean, there's a bureaucratic coup, I beg your pardon, that's underway at the moment, but otherwise on the day or in the weeks following, there are going to be some antics. Some of the states are potentially going to try to secede or not recognize the winner if they don't like who the winner is. So there's definitely going to be some drama. There's no doubt about it. But the question is, if there's a military coup, then we could see the markets entirely upheaved. But I think the odds of that are 60-40. There's definitely something funny going on with the military there. There's definitely people who are, they've been very much Fox inundated. So we're going to have to see what happens with that. But I think it's unlikely. I think that the country's way more stable than the media and the propaganda makes you think it is. Okay, so that's let's have a quick look. Sorry, at dollar index, and again, I'll try and keep this straightforward and simple. We're still pushing up towards the top. We are at the top of the range now, and again, this could be something that we see happen. We see the week pull back here and then push through on non-farm payroll, or the other way around, test up at 106.50 and then get a rejection on that. We could see that happen for the moment. And also, don't forget, there's we're gonna have a look at the yen pairs because there's stuff going on there as well. And actually, it's very timely. It's happening today, so it's worthwhile doing that. Here, you can see, for example, we look at euro dollar. It's coming back into the bottom of this. Is it going to find some resistance here and push away from that? My expectation is yes, that there's a very good chance it is going to be able to potentially reject you. I can see as we speak, it's trying to push a little bit higher, and we'll see how that goes. But yeah, I think we could see by the end of the week, we could potentially see a stronger dollar. Sterling as well, coming right back up into that resistance area, so there could be some potential shorting on that if we get that rejection. But definitely, if you've been kind of feeling that trends just aren't, staying for very long, that's absolutely true. If you look at Aussie dollar, it's almost completely back into the upper ranges here, and that's hinting at a weaker US dollar. So it's not just you, and it has been that way for several months, and we can see it. We can actually see the ranges going all the way back to November 22, and sometimes you forget that. You're kind of in, and you're going, what's going on with the markets? I've been bleeding on a few trades here and there, and then you realize that actually no, it's actually been this way for a while. Okay, Kiwi dollar, US dollar. Actually, really nice kind of structure here. It's in a good place for it to ultimately turn into a bit of a bearish candle, but I would mention there was a strong rejection of support here. This price action here is particularly bullish. So interesting here, a couple of these are hinting at a weaker US dollar. Then again, we have something such as the dollar Swissy. Okay, so dollar Swissy, in principle, I'm very bullish on the Swissy pairs over the coming months. However, they are overextended, and I would expect a bit of a retracement down to 0.9 or even down towards that 0.88. 889 level as well, so looking to see if that's going to be the case. A strong resistance level. Then we look at dollar CAD. Dollar CAD is a good area to find some support. Could still come back down a little bit lower. So again, these are also saying yes, there's still some room for potential weaker dollar. Then we get to what's going on at the moment. You can see here actually today off this, so it's now 7:30 a.m. in the UK. It's 9:30 where I am. We've got this bearish engulfing candle, but now we can see the back of Japan has definitely started to push back. They didn't really want price to go beyond the 150. Now we're sort of in this area where you're going to start to see them start to tinker with things, and it's become higher risk for swing traders and day traders. So obviously you have to you got to approach that cautiously. If you have a quick look at some of the other yen pairs, you can see this is definitely a yen thing as opposed to possibly just dollar yen specifically. You can see you got to do that. So it just means exercising caution or avoiding the pairs entirely. Okay, so gold, we've had a nice retracement. Looks nice and bullish here on the daily. We've got nice bullish candles forming, which means it's probably going to attempt to go a little bit higher. But I would caution traders that we've produced a swing high here. And therefore, if it does break the low of last week, it would make sense that we would set it head down to 250 or potentially down even further, down even as far as 150. Looking at silver, to compare that, you can see silver also potentially does still have room. Okay, I don't want to sound like a school teacher saying room for improvement, but 2540 is still a potential there. So just be aware of that again if we break the lows of that. It is trying to stay where it is. What often happens when you get an overdue correction is that buyers are so keen to, the bulls on the recent move are so keen to get back in. They get in at the earliest opportunity, and sometimes that's enough. Sometimes it is a shadow retracement and it keeps going, which is relevant to our discussion of the global markets in a moment. But sometimes it's not. You get the first batch of bulls returning, but it's not enough to really change the momentum, and so you have a failed start or a false start, and then it has a deeper correction, and then the remainder of the bulls come back in, and then they make that second move happen. So I'm just going to skip natural gas. I'm time conscious today. Let's have a look at crude oils. Crude oils, again, you can see beautiful pullback into the previous highs, attempting to go higher. They're not really that strong. We've got a swing high here on the daily. We could see it just kind of faff around and go a bit sideways. So crude oil, although it is generally speaking technically bullish, it's just not super strong. So this one here, for example, this is West Texas, has produced a bullish candle. Looks amazing. I'd like to see if it's going to work its way, break the high of that. So the high of this is what I would really be watching to see if we can break 84.47. Then we should see a bullish follow through and then back into resistance. Let's go through in global indices, have a look at that. So this is basically the story here. We've got a beautiful retracement back into the highs. I spoke about this in my last video. The question is, will we get a bullish candle? Will we get that, the first batch of bulls have definitely returned to the markets. Is it enough for us to take off from here? We're going to see. We've got the possibility of a higher low here, and we're going to see if that's going to be the case. Or will we get a deeper correction? And the only thing is, it's tricky to say that. I would say that there is a fair possibility that it's going to make another move up from here, and then possibly find some resistance and have a deeper correction. Maybe what will happen is we'll see a good strong move till August, for example, then see that usually September's going to be terrible. We might see a terrible August and September, and then see if that's going to be the case. But I still, again, would have preferred for us to come back in on the monthly to have had a bit of a deeper retracement. And we really don't have much time for April's candle to not be a red one, which makes it a swing high technically. So this is the tricky part. But the Nasdaq is already starting to push higher. It's already broken the high. So very much the markets we could see here will be supported by a weaker dollar. Again, hinting at that weaker dollar, seeing the markets just push away. Looking here, for example, Russell 2000 bullish inside candle off the 50-period moving average. It's going to bump its head a little bit against the moving averages here, but I think it's also keen to see if it can get out of that range. Then we've got the FTSE here. Give me a second. Okay, so sorry, just detected the boat moving Okay, so we're staying doctor. Okay, fine. It's very windy out there, so it becomes quite choppy. So FTSE, look how beautiful that is. The FTSE is really nice and happy and healthy. Yeah, it's kind of got to break to these highs, but generally speaking, that's a great sign when you've got non-US markets that are looking so nice and bullish. So very, very cool to see that happening. The DAX as well, no doubt, is going to be particularly bullish. This is a great retracement here. See, this is that contradiction. The weekly in isolation looks super bullish, should keep going from there, but then you look at the monthly and you go, okay, we've had a bit of a stumble. Now, in the past, we have that happen. We kind of have a bullish move, red candle, then we carry on going, and then we have a deeper correction, and that very well could be the case here. And actually, it's just one of those things where I can only really know for sure later in the week, but it's one of those two situations that is likely to unfold. Okay, so then we've got the ASX out of Australia. That's a really nice correction, so therefore this one to me makes a lot more sense. Look at that beautiful gravestone doji, which is also technically an inside candle, and actually it's often can be a sign of exhaustion if it's at the bottom of a swing low. So also looking really nice there. Nikkei, let's get through to the Nikkei. The Asian indices are looking particularly bullish, guys. The Hong Kong, China, they're looking very, very nice. Here we've had a really nice correction. Again, bullish inside candle in the moving averages overall, but again, I really would have preferred a deeper correction. So we're just going to have to play it as it lies, so to speak. Right, let's move on. Let's have a look at Apple. So Apple, I was looking for to see if this was a double bottom. I stand by that. We're still in this area, and I'm looking this week to see if we stay where we are and produce a full-bodied green candle. If we do that by the end of the week, then I think that analysis still stands, that the buyers are still very much in control. Amazon, so I'm going to run through these pretty quickly. That is a almost picture perfect bullish candle, guys. This in many situations would be a strong buy signal, but we have to see what happens within the bigger picture. We are overextended. We've got an indecision candle here. We could generate a swing high on the monthly, and we're also just past resistance. So again, we've got two contradicting pictures there. We need to see what's going on and how it's going to go. Again, I think there's a fair possibility the markets are very keen to keep going. Certainly now, possibly the markets are thinking, well, let's just take what we can before, as we head closer to November, we'll then kind of exit the markets or extricate ourselves. And so here, looking at AT&T, no clear signal here, but certainly not looking terrible. ARC Innovation. ARC Innovation is, let's have a look, bit of a bullish candle here, stuck within the range on the monthly, just within the range, so nothing super fancy there. ASML, very nice. Again, it's the same scenario, so it's a repeat of it. We've got a weekly bullish setup. We've got some clear, strong resistance there. We've also started a monthly retracement, so the question is, which way is it going to go? So that's going to happen for quite a few of these, and I'm just we'll see how that goes. Glencore at the top of its range, looks fine. Let's have a look at Tesco's, looks good, going back up to the top of its range. So all of that is beautiful. We actually mapped out this correction. It's in the moving averages. I would say for here, Tesco's got a really good chance of ultimately continuing up from here. Not necessarily just this week, but in the coming weeks. Amex looking fine, starting to slow down a little bit where it is. 240, 250 is probably going to be its top, and then it's probably going to have a bit of a correction. So it's definitely starting to slow down. Slow down meaning that there's going to be a correction at some point. Berkshire Hathaway still within this range, but starting to look like it really wants that monthly retracement. Okay, so again, we had a chair. So we had September last year, October, and then it carried on up, and we're heading in towards the possible here. So even this could be similar, December, early part of the year. Maybe what we're getting is something like this, May. Just a bit of a bearish candle, then it carries on, and then we see the continuation. But there's strong resistance at that 420 mark. Coca-Cola. Coca-Cola, fine. Stop, looks good. Just going to keep pushing to the top of the range. BP, crude oil, it's going to be the same. They look more bullish than bearish, so they don't look that bad. Let's just jump straight to Exxon. You can see here my data's slowing down a little bit. General Motors, very nice. I think that's good for a continuation, and it's not ridiculously overextended. Let's have a look at JP Morgan. Has already done a retracement and is pushing up a little bit higher. I'm looking at the weekly a lot more than the daily per se. You get so much more out of that. And again, it started that process, so it's the same one. And we've got QQQ. Same thing, exactly. The same issue in principle with the previous charts here. Adidas, okay. So notice how Adidas going from very big candle, sort of volume candle, to smaller ones. Okay, so it's kind of running out of steam on the weekly there, but it's really healthy overall. I mean, it looks really good. The future is bright for Adidas at any rate. Meta Platforms, very nice correction. So, excuse me, I was busy traveling and I could see how we had that correction, but from a monthly perspective, it's beautiful. But there's no doubt that we have strong resistance at this level here, which is somewhere around the 490 level. Call it 500 if you want to round up. And that's a really nice correction. It's beautiful. It's been super, super strong. Beautiful for it to have a correction down to 378. I really like what I'm seeing there. Morgan Stanley looks like it's attempting to break out of this range. Also overall nice and bullish. So it probably is able to work its way up to that 100 mark. Let's have a look at NVIDIA. NVIDIA producing, again, a buy signal on that weekly. The first batch of bulls have definitely returned. It could absolutely benefit from a pullback to 600. I stand by that assessment. I would take anywhere even to 700, but I would prefer to have a deeper correction. So let's see what's going to happen there. So, okay, so let's say one scenario here is it pushes a little bit higher, and then at some point in the coming 18 months, we get a much deeper correction. I just don't want anyone to be surprised. We need that from a price perspective. We've gone parabolic. Parabolic moves almost always tend to end with a bit of a deeper correction. It doesn't mean it's unhealthy. It just means that it needed to snap back from that overextension. From a technical perspective, and I fear that that's going to be one of those cases where everyone's going to panic and there's going to be talk of doom and gloom, whereas actually it's just a much needed rest. Netflix, again, very nice correction, very much overdue, beautiful back into this area. Anywhere down to 500 still qualifies as a healthy correction. PayPal's looking good. Look at that really nice thing. It's above the 50-period average, bouncing off that finding support. It would from the weekly in isolation, PayPal's on its way up. We'll see how it deals with this resistance, but it's on its way up. In other words, its trend on the weekly has now significantly changed. Spotify had a little bit of a knock, but still not bad. I think it's just bumping its head up against all-time highs. Okay, my rates are going up as well. My Spotify monthly thing is going from 17 something to 19 something. So that's a solid business model to be able to up your subscription rates, especially these days. But yeah, from an inflation perspective, next thing you know, at first you're spending $50 a month on all your different things, Netflix and Apple and all these different luxuries, so to speak. And next thing you know, it's $150, and suddenly your energy bill's gone up, and suddenly you're bleeding $500 a month, and you have no idea where it's coming from. That's how it happens. Okay, so a bit of a correction here within Spider, just back within this range. This one is not a super strong one. I need to have a deeper look into that to find out kind of what's dragging it down. What is dragging it down? Bit of a double bottom here on FedEx, but overall slowing down. Look at that, just beautiful slowing down. Wix coming in here, it's trying to turn around. Go through to Tesla. Strong kind of recovery post the earnings report, which was absolutely shockingly bad, so it shouldn't have recovered this way. But that's a good indication of a potential fraudulent stock at any rate. So a lot of people, I've seen a lot of headlines going around saying that Tesla is the new Enron, which is an interesting perspective to take. And odometer, this is really interesting, just odometer, because the odometers are electric, often the question is that they're being accelerated. In other words, that they're not accurate, they're accelerated in order to expire the warranty sooner, and so that they don't have to pay out on repairs and so on and so forth. Interesting kind of rumblings, whether that's true or not. I'm not going to say it's true because I don't know if it is, but waiting to see if that stuff is verified. But if it is, then that's kind of how the whole Enron thing kind of comes about, so we'll see. Vanguard, nice little pullback here. Classic scenario, exactly what we saw with the Nasdaq. Started a swing high on the monthly, but it's got the first batch of bulls coming back in. Walt Disney, beautiful. See how it's slowing down here as well? It's slowing down. So Walt Disney is very keen to turn around where it is, and we marked the area ahead of time anyway. We can see the blue patch there, and it's a break of resistance here and a level of support. So look, a pullback down into 104 or 100 would be acceptable, but it looks like it's trying to turn around where it is now. Bonds are trying to sort of stabilize here a bit, so it's a little overextended, could produce a bit of a swing high again, not indicative at this time of any significant change in sentiment. Eurobonds, again, still trying to turn around. Let's just get rid of this, get rid of that indicator there, but yeah, still stuck within this general range. Overall, it's now sort of gone a little bit bearish again, so my expectation for now is it's probably gone sideways. A lot of these we've seen, especially with natural gas, where it does now start to turn around, its attempt to turn around, and then it kind of fails again, given enough time. But yeah, that's it's not a lot of those. I've seen it with natural gas. Okay, cryptos. So cryptos again look like they want to have that deeper correction. And so what? Bitcoin could come down to 47,000, anywhere down to 47,000, down to 40,000 would be acceptable, ladies and gentlemen. It would be okay. Might not seem that way in the media if that happens, but it would be very acceptable. Might end up on a sweet spot, 45,000, for example. Could see that happen. Ethereum, already very much trying to turn around where it is. A little bit of it's not as overextended, so the correction on Ethereum would be smaller. So Ethereum is a kind of, in terms of the moves it does, it's not as extreme as Bitcoin, but it's not the darling. It's not the darling of cryptos the way that Bitcoin is. Solana, also very nice area. It is trying to slow down. But we might find it that it hits a little bit lower here and then find some support. Look at that strong rejection there. Again, back down to that 100 area is okay. That's acceptable. Cardano, not as strong as the others, but probably will come back down to these highs here. Binance, let's have a look at this stuff. And Binance actually looking quite strong at the moment. I don't think it'll succeed. I'd be surprised if this managed to break out while everything else is taking a correction, because there's a lot of correction stuff happening, and cryptos can arguably be seen as tech stocks as well as digital currencies. So let's just see how that ultimately unfolds. But I would expect at some point to see it potentially come back down here, especially if Bitcoin does. And that's it. There we go. We're running in just under 20 minutes. Ladies and gentlemen, please have a great week and trade carefully. Keep in mind all the different stuff happening on with the yen pairs, with FOMC on Wednesday, and of course with non-farm payroll and ADP, with jobs numbers out of the US on Thursday, Wednesday. Just be careful with a lot of that stuff. It creates volatility, especially if you're day trading. That's it, ladies and gentlemen. Thank you very much and have a great week.